Crypto Trade. This is Don Kaufman. March 29th, 2021. 30 minutes to go to the cash close here on this Monday afternoon with the SPOOs up 5 handles. Fairly resilient marketplace. Just brushing aside all of the rumors that were being perpetuated on Friday over the weekend. Our market's going to trade effectively today. Listen, the marketplace literally brushed aside the entire idea of Bill Wang and a $20 billion fund blowing up. Let's actually get to work here in this evening's video. As I said, the S&P is largely unchanged after trading all the way down into the, low 3,900 realm. Here we are, back up to 3,970. As I said, a very resilient marketplace. You know, one of the first things to kind of point out in trade today, as I said, they kind of just brushed aside, any real news. So some of the financials that were prime brokers took a little bit of a hit. If you're kind of unfamiliar with that term like prime broker, listen, large hedge funds, okay, money managers, they still have to trade through somebody. You look at somebody like Credit Suisse, okay. This one, well, they actually did announce that they're taking a fairly sizable hit simply because of one fund, ultimately Bill Wang, that went up in flames, and the stock is trading down, well, only about 10% off some of the lows of the session. But there was exposure outside of that. Nevertheless, you just don't see it here inside of the financials. And that's the point that I wanted to make with this, is much of this was just blown out of proportion. I heard over the weekend, this is going to be the next long-term capital management. I tell people very often, long-term capital management was my first few weeks inside of my entire career in the business. I started graduated college in 1998, and a few weeks later was actually in Chicago trading. And of course, summer of 98 is when long-term capital management went up in flames. Nevertheless, I mean, that was leveraged products. That wasn't like, a portfolio that was leveraged into stocks. Okay, they had 45, million shares of this and so forth. But again, there's a vast differential between a firm that is actually using derivative products and futures contracts and all kinds of over-the-counter bulletin board, derivative products versus, oh, listen, this guy Bill Wang just owned, a tremendous amount of concentrated equity positions. I'll tell you what, though, net, you see how resilient the financials happen to be today. And I'll come back to that in just a moment. But there is one thought that definitely crossed my mind. I don't think enough people are actually talking about this. What's the real fallout going to be? So as I said just a moment ago, and, you look at this and again, how resilient the markets were and pushing this entire incident kind of aside, but it's probably going to get most of the prime brokers. As I said a moment ago, somebody like Credit Suisse was who, you were actually trading through, if you're a major hedge fund. Who else will be looked at? Goldman Sachs. Look at Goldman Sachs in the trading session. Okay, kind of wild. After being, offered a little bit lower here at the 320, it's actually bid back up. You start to look down the list, some of the usual suspects, negligible losses over here. But each and every one of these that is considered a prime broker that are actually clearing some of these bigger firms trades and some of these hedge funds like a Morgan Stanley, I suggest that in the coming days, the coming weeks, they're very likely to look in detail now at what some of their clients are doing. Remember, somebody like a Morgan Stanley, and I'll bring Morgan Stanley back up here as I had it up here a moment ago. Somebody like Morgan Stanley is probably going to take an incredibly close look at all of their clientele, all of their hedge funds, all their money managers out there. And with that knowledge, they're probably going to clamp down on the risk to a degree, look at concentrated equity positions, and in large part, they may jettison a number of clients. That would not surprise me at all. That surely beats taking a $2 or $3 billion hit to the quarter. So if there's going to be fallout again from this entire event, I would assume that was going to be it. With that, let's actually move on to, well, you know what? The financials, they rallied. They're selling off here just a little bit coming into the cash close. Nevertheless, they rallied. So why did the financials rally? Because the bonds actually sold off throughout the course of the day. I'm going to tell you right now, it's the bonds that are starting to rally back. And the moment the bonds started to rally back, the financials are starting to feel a little bit more pain at this point in time. But net, Okay, what I'm trying to point out in this particular respect is the fact that again, the marketplace is much more responsive right now to moves inside of the bond market than they are until some outside news where a fund that's $20 billion goes up in flames. Okay, that mattered for in terms of a mainstream story, but the reality is the bonds are selling off again. If the bonds are selling off initially, that's beneficial to the financials. What we should see though, if the bonds continue to sell from here, and if the bonds actually get back down to the 153 and 20 tick range, okay, again we're close to it, right? So about another point and a half down on the bonds. I think that's where technology might start to have a negative reaction once again. So again, push aside everything that you heard about large fund blowing up. Let's get back down to business over here. The fact that the bonds are very large, they are what are moving the marketplace at this point. There's also another aspect in this marketplace that really has me looking, and that's it's volatility. Volatility has been bid throughout the course of today's trading session to a larger degree. If you take a look at the volatility futures are up about 3%. The VIX is actually bid a little bit, up to the tune of about 10%. The VVIX is even bid. And again, the S&Ps aren't necessarily down, but there is definitely a feel of a little bit more risk in the air, if you will, in this marketplace. And again, that's not, in my opinion, that has nothing to do with, again, this fund that blew up, and everything to do with the fact that, once again, the bonds are starting to put pressure forth to the marketplace. They're doing it in some big size. All right, spinning things around a little bit. The other concern inside of the marketplace, of course, has got to be the Russell. The Russell, some of the day-to-day moves have been so large, this doesn't even look like anything anymore. What I'm actually referencing is if you took a look at some of the daily moves and some of the intraday moves that are going on, okay, on a day-to-day basis, it seems like a 2% move inside of the Russell is almost becoming the norm. This looks like a fairly kind of muted range in comparison to what you saw last week, multiple 2% plus trading days. But to also put this in a little bit of perspective, take a look at the IWM and apply what we call auto expected moves. And if you apply auto expected moves, you're going to see that the Russell already clipped the lower edge of its expected move. Nothing like a Monday in a 4-day trading week. Remember, this is a 4-day trading week. Nothing like a Monday, though, to start off your trading week where you actually hit the lower edge of the expected move, bounce off of it. Okay, but the Russell, okay, once again is becoming a little bit of Mr. Toad's wild ride. I will remind everybody that the Russell last week, literally had a full-blown 2 sigma, almost in 3 sigma territory over here, only to actually revert back up and close the week, literally close the week on the edge of the expected move. So what can we actually anticipate a little bit for the remainder of the week? One of the first things that I'd like to say is, again, because it's a 4-day trading week, all right, let's actually tune in real quick over here to the SPX, and specifically the SPX has about a $60 expectation of movement higher or lower. I was talking about this in the weekend video, but now that we've actually passed through really Monday, what do you got? You got Tuesday, Wednesday, Thursday, and if you take a quick glance over at the trade tab here, you will actually see there's a quarterly expiration March 31st, and there is again an April 1st expiration, which is a Thursday. So you're getting again 3 expirations this week, and on 4 trading day week. So you can kind of feel out volatility every step of the way. One of the things that is a little bit surprising here, and again, this is why I'm spending some time on this, okay? On Friday, the expected move. Is basically $59.65, okay? Today, even at the end of the trading day, it's $59.27. So the one thing that I want this to kind of resonate with you, and you're probably going to ask, well, why is it the same? Okay, we just passed through an entire trading session. That's exactly what I'm trying to point out. So the expected move is supposed to be $60 for the entire week. We passed through a trading day. Effectively, the expected move is still $60. Options are not decaying in here. Okay, what you're actually seeing in this particular case is volatility is bumped up over the on Friday. The volatility here was closer to 15%. It's actually bumped up to about 18%, as I said. There's still a feeling of risk in the air. I believe that it's the bonds that is actually sparking some of that risk in the air. So what am I telling you here? Yeah, get ready to rumble. There's going to be some volatility throughout the remainder of this week. Doesn't matter that we're coming into Good Friday, the Easter holiday weekend here. I would anticipate some pretty good volatility here. coming into Tuesday, Wednesday of this week. Sure, maybe things die out later on Thursday, but keep your helmet on right now because, again, most of your volatility indications are higher. All right, watch for those bonds very, very carefully. If the bonds start to see any more sell-side activity, all right, that could actually put the technology sector into a tailspin and see some sell-side activity there. Thanks, everybody, for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.